Hey guys, welcome to the weekly analysis video. Today's date is Sunday the 15th of April, and we've had a pretty crazy week last week. Obviously the markets haven't been that easy to trade recently, and this week isn't going to be an exception, although we do have one trade setup that's looking quite promising, which you can actually see on the screen right now, but I'm going to go through and explain in a moment. But before we go into actually looking at last week's technicals and this week's technicals, we'll just quickly go over, all of the fundamentals that happened last week, what news came out, and what we can expect to see this week. So last week in terms of news, not a lot happened other than GBP and USD. Both of those had a few major releases. So on Tuesday, we had the Halifax HPI for GBP, which came out at 1.5% versus 0.1% expected. So obviously we had quite a big beat there, which is great for GBP. We also had for USD on Tuesday, PPI month on month coming out at 0.3 versus 0.1 expected, and core PPI coming out at 0.3 versus 0.2 expected. Obviously the main one there is the PPI month on month, which came out significantly better, which was also good for USD. Going into Wednesday, however, for GBP, we had the manufacturing production month on month, which came out at minus 0.2% versus 0.2 expected. So a bit of a turn there on GBP because that was worse than expected. However, we did have the goods trades balance come in at minus 10.2 billion versus minus 12 billion expected, which sort of evened it out a little bit, but still a negative day there for GBP in terms of news. On Wednesday for USD, we had the CPI month on month coming out at minus 0.1 versus 0% expected, so not a bad miss, but a miss all the less, which is bad for USD. And then throughout the week there wasn't much else for any of the other currency pairs or GBP or USD either. So moving away from the data releases for last week, we had a few bits of news that came out. To begin with, at the start of the week we had China, where their president basically said that China was going to lower the import tariffs for autos, which was good. They were playing ball with the trade wars there. And he did also say that the Cold War mentality was out of place. But moving over to the Eurozone, we had ECB who said they could lift the deposit rates from minus 0.2 up to minus 0.4, which would be their starting of the process for the rate hike. Now we did see a bit of a reaction from that, which we'll look at when we go into the technicals. However, it is a bit of a rumour. If you notice the wording they used, they said the ECB could lift the deposit rates. I'm not saying they are, they're saying that's what they could do to start the rate hike. And then of course towards the end of the week, which I'm sure all of you are already going to know, we had Trump that ordered strikes on Syria. So now the US, France and the UK have all launched missiles over at Syria, which when we go into the technicals, remember that because that's going to basically shift the sentiment. We're going to be going back into a risk-off sentiment this week. Obviously with countries firing missiles at one another, there's a little bit of imbalance there. No one really knows how stable the market's going to be. And so people are going to be going from the high interest paying currencies such as USD, GBP, AUD, and just flowing into stuff like JPY. So USD JPY, which is up on the screen now, that's really going to help out our position. As you can see, it's a short. And if we're going into risk off where people are leaving the US dollar and they're all selling it and they're buying the Japanese yen, as that's a safe haven, then all that's going to do is push USD JPY down, and we're already shorting it, so that's great for us. So that's one thing to keep an eye on this week. Things like USD and the other higher paying interest currencies are going to be being dumped, mainly towards the start of the week. I wouldn't imagine all the way through the week. So now we're looking at the daily chart for technicals on USD JPY, and as you can see, pretty much the whole of last week was consolidated. We were in this zone, up, down, up, down, up, down, nowhere at all. It wasn't until the last day where we broke above all of the highs, came up towards our high point back here, which was at the start of February. However, we pulled back and closed pretty much where we started on the day, and it was back inside of this zone. We got short for technical reasons here, as well as a little bit of sentiment that was driving it. However, now that we've had this shift into risk off that we were saying about, we're definitely going to expect to see price just come down even further from where we are now, probably to the lows of last week, which come in circa 106.631. However, throughout the week we're almost certainly going to break through here and head down towards our bottom line that we have here in red at 105.324. We've marked out 107.908 as our strong resistance zone here. This also comes in with a 108 even mark. If we break above here, then we can be looking on a technical level to buy. Now, if it does actually break above here, I'm not going to be buying due to the sentiment in the market at the moment. I don't think that price going above here is a sign for us to buy unless we actually get the sentiment backing it up, where people stop launching missiles at each other and things start to settle out again. Although I would be surprised if it breaks above here at all anyway. So while we are below this line, you can be looking to sell. Where we are right now is a perfect time anyway, because we've got this massive rejection wick coming all the way up here. And now we're back in the zone, so at least we're going to come to the bottom of the zone, and that's if we had no news. With news, we're just going to probably smash through the bottom of the zone and straight down to our bottom red line at 105.324. So looking instead now at GBP USD, we can see that we have our two resistance zones up here that I've drawn out already, one at 142.44 and one at 142.65. Both of these are formed from these candles near the end of January at the start of the year. We had a massive breakthrough and then just came back down. Tried to retest again, got pushed down really hard by sellers again. And it's taken us a while, but we managed to get back up there again before it was rejected and got up here a fourth time, where technically we expect it to get rejected again. The reason this is going to be a tough one to trade throughout next week is that obviously last week for GBP and USD we had some pretty good news for both, and also both of them are quite high paying interests, so they're both going to be dumped for JPY from the risk off, which means what we're probably going to expect to see is most likely going to be consolidation until we get the first data release for one of the pairs, which should drive a trend either way. In these analysis videos we don't try to guess the trends for the next week because one data release can change the entire trend and then it can change back the next day. All we're going to do is mark out some levels and tell you what to look for if it breaks particular levels. So if on Monday we open up and people start to sell off here and we see price start to drop, then we can actually get rid of that line. And the first place that we would really expect to see price turn around is probably around this zone, the 140.74 mark. So we could see price come from the highs in the resistance zone here, all the way down to 140.74, which is also where the moving averages are at the moment. So you can see that in terms of the moving averages, we are overextended. So we do need to pull back to them slightly, and so that could be what happens. On the flip side, we could just see that we break up through this resistance zone and close above it, and in that case I wouldn't buy. If it breaks above here, I wouldn't be buying instantly because it could be a false breakout like here, 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 or even that we've had on Friday. Instead, as we tell our students all the time, you wait for the breakout, wait for price to pull back to the resistance zone, which is now support, wait for a buy signal down here, and then we can get long and take it up past the previous highs for take profits. Next up we have Euro USD, and as you can see just by looking at this chart, it's very, very ugly. We've been in a zone since pretty much midway through January, and we've just been bouncing up and down all the way through since. As you'll also be able to see, we do have an open trade open on this still, where we are shorting Euro USD. This could turn invalid on Monday. We're going to wait and see how the market opens up and which way it wants to move, and then we'll either close it or leave it open depending on which way it's going. However, all we have to go from that we can predict with is the risk off again and USD being dumped, which in this case would actually push Euro USD up. However, Euro will also be dumped a fair amount, so is that really going to do much? Are we just going to continue to consolidate in this zone until we get a news release, much like GBP USD? Yeah, that does seem very likely. Again, I won't be trading this until I've seen a news release. The trade that we're already in, like I said, we'll wait, and if it goes in the right way when the market opens, we'll keep it. If it goes in the other direction straight away, we'll probably just cut it and just see when we can get into a new trade on it this week as soon as some data comes out. Other than that, there's not really a lot to say. We have the major support at 122.39 and major resistance up at 122.44. Because it's in a zone, really, technically, you shouldn't be looking for any trades on this because you don't touch trades inside of a consolidation zone. However, if you're intraday trading this, you're probably going to be fine. Really what we want to keep our eye on for the perfect trade is come down to 122.39, break through here, come up, retest, and then the market give us a sell signal so that we know to jump in short, and then we can take price down to the previous highs from back here, around the 120 even mark, slightly higher. Of course it could break out to the top side of the zone as well at 125.09, and if it does that we just wait for the opposite, price to break out, come back, retest, give us a buy signal, and then we can go long. It's just that it's very unlikely for either of those two to happen this week in my opinion. And so really all I'm going to be doing is trying to take the numbers from the data releases and then either short or long with take profits near this support level or near the resistance level up there. So that's it for this week's analysis. This next week isn't going to be an easy one to trade. As you've seen, a lot of stuff is very choppy and in a zone, and also we're switching sentiment. Just stick to your good risk management, don't open too many trades at once, and you'll come out next week on top as well. For anyone watching this who's not already in our Telegram group, there'll be a link in the description. You can join it. We share trade ideas throughout the day and also post signals so that you can just copy our trades from our analysis that we do ourselves. And in there you can also get details on the training programs that we offer, where we take you right from the basics all the way up to the advanced stuff and teach you how to become a profitable trader. So if either of those interest you, just go down into the description. The chat invites will be there. You'll have to download the messaging app called Telegram to join them. But once you've done that, just click the link and you'll be in there. So guys, have a good week trading, and I'll see you next time.